welcome to the stage, Mr. Jon Najarian.
Thank you. Thank you, Neil. So let's see. Okay. Thank you very much. It is a pleasure. It's great to be back in Chicago. I live in Puerto Rico now, so if I see some of you later and you ask me questions about why Puerto Rico, I'll say kite surfing, but I might whisper taxes. Because it is a fabulous place to live. People are great, food's wonderful. It's 3.5 hours, 4 hours from Chicago, about the same from New York, and it's a lot of fun. And I've been there now for 3 years, been through 2 hurricanes, and all of the repairs that they made after Maria have helped make it a much better, safer place now. And virtually any place any of you would likely live in Puerto Rico has generator backup, has cistern and all that sort of stuff. That was a minority of places back in 2017 with Maria, but now it's everywhere. Any place where gringos, I refer to myself as a gringo, anywhere where we would live, yeah, it's whether it's an apartment building or whether it's a home, a private standalone home, it's going to have all those things that make it possible to keep operating even if there's a storm out there, including my Starlink from Elon Musk. So I use that for my internet from there. It's faster than anything here in the States. I mean, I'm pulling down 700 megs all the time. So it's full streaming, it's great. And even with big clouds, it's working just fine. All right, so as Neil said, my brother and I do a show called The Rebel's Edge. I'm not gonna hard sell that. It's a show we do 4 days a week. We're talking to a major streaming service right now about putting it on their service. They might be named after a big river in Brazil, that service. But we do basically, we talk about stocks. We only waste 1 minute of your time with macro. So we're mainly talking about macro, futures, stocks, and then a little bit of sports, all in a half hour. So it's pretty fun. For 41 years, 43 years, I guess. Thank you, sir. I've lived in the Chicago area before I moved to Puerto Rico, played football for the Bears, 4 games. My brother, the other guy in that picture, he played for 6 years. And he played for, let me see, he played for Seattle, Vikings, Tampa Bay, and the Raiders. And then he was the #1 pick in the World League, which was, you know, those teams that were both in Europe and the United States for football. This is our book. It's our latest book. It's Not an Option. You can get a free copy if you go to that website, itsnotanoption.com. You can claim a free copy of that. The only reason you pay for anything is if you want it faster. Otherwise, through regular mail, it's free. It's a 240-page book on trading and options. If any of you want to get a copy of my presentation, if you scan that code, you'll be able to send an email to us that says, hey, I'd like that presentation. And we'll send you a PDF of this whole presentation so you won't have to write as fast and feverishly as you otherwise might. I was going to talk briefly about the Fed and rate cuts. What if they don't cut? As you see here, this is a graph of actual money being invested. How do we know? Because this is the CME, the Chicago Mercantile Exchange, owns the Board of Trade as well. And what they do is they track Fed funds and they see how much money is being invested to decide, okay, the odds of a Fed rate hike are this, or a rate cut are that. As you see, the rate cut odds fell off the table in the last couple months. It used to be up around 70, 80% for March, and then it plumbed all the way down to 0. And these guys are extraordinarily accurate because it's real money that they're tracking. The same sort of thing that I like to rely on, real money. So one of the Fed members of the FOMC said rates are likely to stay higher for longer. I said, let's take a look at what happens if we see rates not dropping this year. And I'm going to give you a stock that I would buy if that happens. And what if rates do finally go back down, I'll give you a stock for that, and I'll show you how I would trade it. If rates go up, I'd bet on this guy, Jamie Dimon. You could go over to Goldman Sachs too, but Jamie Dimon's going to outperform Goldman every day of the week. These are all of their revenue streams that pour into JP Morgan, and as you see, revenue's up 18% year over year. We all know that banks get paid more with the balance difference between what they pay depositors and so forth. So I think this is a pretty strong bet if we see rates stay higher for longer, like that Fed member said. I think this would be a good bet. So what did I do? I took a look at a chart. There it is, this 1 year ago till today. It was 195 bucks yesterday. So I said, okay, let's look at this as a strategy. For those of you who haven't ever traded an option before, that's what I trade every day, options. That it's not an option just to own stock. If you wanted to own 1,000 shares of JP Morgan, I know most of you in the room can do the math, that's 195,000 bucks. It's like a condo someplace, basically. Or what if I told you you could control 1,000 shares till January of 2026 for $30,000? That's basically buying an at-the-money, a LEAP option, long-term equity anticipation security. They shortened it up to an acronym called LEAP. You could buy that for $30, which, since it controls 100 shares per option, 10 of those would cost you 30 grand. So instead of investing 195,000, you could invest 30,000. Well, if JP Morgan falls, some sort of debacle and it corrects by 20%, you'd lose $39,000 of your $195,000 investment. The option loss would be about $30,000. Better, but still, you're losing money. If you don't pick the right direction and you're buying stock or option, you're going to lose. But with the option, you had a much more palatable loss, and you didn't have nearly as much committed to the trade. You could be diversified, if you will. On the other hand, if JP Morgan moves up by 20%, the shareholder would make $39,000. Well, but the option holder, the LEAP, would be worth $44,000. Do you like the idea of having the $30,000 investment that goes up to $44,000, or the $195,000 investment that goes up to $39,000? This is the way that I would do it, and I do this all the time for me, and our team does this for clients and things. Instead of buying the stock, we buy that same LEAP option that we're talking about, the right to buy it, till January of 2026, 1,000 shares worth, 30,000. And then what if we sold the 230 LEAPs? That gives somebody else the right to take it from me at $230 a share. Now my total investment isn't 30, it's 30 minus 13, only $17,000 is what I've got invested in this one now. So the risks, well, if JP Morgan falls, you still lose 39,000, but the option loss, you'd only lose 17,000, less than half. And meanwhile, if it wins, okay, JP Morgan goes up 20%, which is 234 bucks, would be where the stock is. You're making that 39,000. Our LEAPs, the right to buy it at 190, would be worth $44,000. The short LEAP, because that capped off how much I could make, is a negative 4,000, because the right to buy it at 230 when it's trading 234 is worth 4,000 bucks. So we're up $40,000 here. These guys are up 39,000 here, and I'm up that on a $17,000 investment, not a $195,000 investment. But he is one of the biggest option traders on earth. I know, because I know guys that run his portfolios. Warren trades them, Mark Cuban trades them, Bill Gates trades them. I mean, virtually every big family office that I know of trades options and trades them a lot. And this is exactly why. What are the trade-offs? Well, a stock could be a forever investment. You could hand it on down to your kids. You're not going to hand options down to your kids because you're picking something that's anywhere from a day to a couple years into the future, but not a lifetime purchase like Apple or JP Morgan might be. You could pick the wrong time frame. So a lot of people are trading these daily options. They lose a lot of money these people that pick the daily options, because they're not watching that throughout the day. They're a dentist, they're a lawyer, they're a doctor. They're not watching during the day, and yet they're trading on a one-day time frame. So again, to use a Warren Buffett quote, if you don't know who the chump is at the poker table, it's you. So if you don't have the time to trade as actively as me, don't trade one-day options. You could trade and be very successful trading 1 week, 1 month, 1 year options, but not one-day options unless you want to do what I do all day. Here's my pick if the interest rates go down. This was just from yesterday in the Wall Street Journal. Construction slowdown slams building supply shares. This one, that's all they do. Home Depot does a lot more than just building supply, so I picked this one instead. It's builders first. They were doing okay this year until their recent earnings announcement. Stock fell from 200 to 163 in a day. So that's pretty ugly. So we know what that feels like when you're in the stock. And just like with JP Morgan, I'll do a quick example of this one. So at 164 a share, because that's where it was yesterday, 1,000 shares, 164,000 bucks. Option to control 1,000 shares. In this case, I picked 6 months instead of January of 2026. 22,000 bucks. Again, I like not having 164,000 tied up. I like having 22,000 tied up. And if Builder falls 20%, like it just did, your 1,000 shares, you'd lose 32 grand. 16 twice, 32. Options, you could lose the 22,000 you paid. So again, I like it on the risk side to the downside, and then to the upside, if Builder gains or regains 200 by November, the shareholder makes $46,000. If option holders, for that $22,000 investment, their option to buy the stock at 160 would be worth 40,000 bucks. Again, you invested 22,000 to make 40, or you invested 164,000 to make 46,000. And same trade-offs as before. It's not a perpetual, options aren't. You could pick the wrong time frame, and you also sometimes misuse that leverage, because you might say, well, instead of 164,000, if I'm only paying 22,000, what if I buy 10 of those? Now I've got 220,000 invested, and I'm going to make 10 times as much money. You're also risking, and you could lose 10 times as much. So always be aware of the leverage. This is what I used to do. After I finished playing football for the Bears, I came down onto the trading floor and stood there and yelled and screamed, buy, sold! As quick as you can do that, thousands of times a day, you could make potentially millions of dollars a year doing that. In 1999, I started in 81 down on the trading floor. By 1999, we were looking at 300,000 quotes per second. That's when high-frequency trading really started to kick in, because it's trading faster than the human eye or than the human ear can either hear or see. Today, it's 11 million quotes a second. And that's because Apple probably has close to 500 strike prices, because it's got calls and puts from probably $100 to 210 every week. Going out weeks into the future, then every month, then every quarter, and so forth and so on. Hundreds of strikes every time the stock moves. All that quote traffic gets shoved through the pipe that you're looking at when you're looking at Yahoo or whatever you're looking at to see where the prices are. That's what the trading floor looks like now. When you go on the floor of the New York Stock Exchange, where I was last week, there's nothing going on. It's a set. It's like a movie set now. There's nothing. It's all in the data centers. And all the computers are in either Mahwah, New Jersey or Carteret, New Jersey, and they're just pinging at almost the speed of light, buys and sells in the market. And of course, most of the big hedge funds have automated that process. That's what's known as high frequency trading. They are trading at just a fingernail's width away from the speed of light. They're going as fast as they can possibly trade. Over the last 25 years, we've gone from quarterly expirations when I started in 1981. Options expired December, March, June, things like that. Then we went to monthlies. Then we went to weeklies. And like I say, now we have daily expirations as well. That all adds to all that quote traffic and makes it more difficult to see what's going on. This is option volume. When I started in 1981, 400,000 options a day. This year so far, we're doing 50 million options a day. Most of that is institutional trading. A lot of it is still us, you and me, people in this room. But it is amazing how many people have come over to options, as that comparison I just gave you shows. The endorsement of options is immense right now. That's my friend Charles Payne over on Fox. I'm lucky enough to go on there and talk with Charles, or this is back when I'm on CNBC talking about unusual option activity. That's what we do. My brother and I look for that needle in the haystack, but we're not doing it. The algorithm's doing it. It's finding it for us. So I'm going to give you guys a couple of examples in my final 4 minutes, because the last thing you want to do is go overtime with Neil, because he'll charge you $1,000 a minute. So what we did was, the top of the screen there is showing you in January, we saw TKO Holdings. They were buying April 81 calls with the stock at $79. Right there, stock $79, they're buying the April 81 calls. Well, they came out and announced that they were doing a deal to move TKO over to Netflix. TKO owns the UFC, the fighting, the cage match fights, as well as the WWE. So they were moving that over to Netflix, away from USA Networks in the next year. Stock pops $15, or about 20%. And again, the calls that we were long from seeing that activity made us a lot of money. So 1,000 shares of that would have cost us $158,000 to buy 2,000 shares, I'm sorry. But 20 calls only cost us $10,000. Again, these are all reasons why options are so cool, because you could make $32,000 on that investment in the stock on the 2,000 shares, or you could make $24,000 on the options. And you defined your risk on entry, and you have that leveraged return to the upside. And again, 32,000 divided by 158,000, that trader made a 20% return, the guy that bought the stock. Meanwhile, the smart lady who's shaking her head going, yeah, I see this. She bought the options, $24,000 on a $10,000 investment, 240% return. My returns are fabulous. Yours would be too if you were trading options. And when you lose, you only can lose as much as you paid for the option. So like I say, I think it's without a doubt my favorite way to trade. Here's Humana. We had unusual activity in Humana. Let's see, there we go, I can use that. So there's Humana, they're buying puts. A put option is the right to sell. These are what Mark Cuban bought when he sold his firm, Broadcast.com, to Yahoo. He immediately bought a bunch of puts. Why? Because that's like owning insurance on a car. Now he can say, walk away from the accident that happened when Yahoo tanked, since they gave him all this Yahoo stock. He locked in his profit by owning these put options. So here we've got, on the 24th of January, somebody comes in with the stock at 404. They buy the right to sell 240,000, because every option's for 100 shares, the right to sell 240,000 shares of Humana at 385, the strike price of these puts. Well, after the close, that market tanked, because they said, hey, our costs just went through the roof. Stock dropped 15%, fell down to 342. So if you have the right to sell it at 385 and it trades down to 342, you just made 43 bucks. That looks like this. 1,000 shares, you could have put up 402,000 bucks. 10 of those puts would have been $1,000, and the 10 puts went to $42,000. So you had this massive return versus trading the stock. So my purpose isn't to get all of you to trade options, but to consider it. And if you go and get our book for free, again, it's not an option.com, you guys could start doing this. And I'd only recommend that you do it after you learned a little bit more about options, like I say, if it's not our book, read somebody else's book on options. And that's another one in NVIDIA, which had unusual option buying, what a surprise, and the stock popped by over $100 the next day. So the unusual activity are hedge funds getting in and positioning themselves to profit from something that they think they know that nobody else knows, and then they get a leveraged return. So anyway, that's what I wanted to present to you guys today. I appreciate it. I look forward to meeting many of you throughout the day. Thank you.